Okay, this is timing strategies for Monday, August the 4th. Client blog update. This is not a recommendation to buy or sell or take any investment action whatsoever. It's just a communication for clients, and if you're a member of the public and you're not a client, you have any questions, please feel free to give us a call or an email. And with that, let's get started. Okay, so as I mentioned from our last update that we went long, but not in the indices. We went long on the XLE, the Ridex Energy Services, and our Ridex end of day account on this day here, which was the 30th of July. Well, let's see how that's looking now, because that allocation's changed. Whoops, whoops, whoops. Didn't work. And again, you know, my instinct told me don't buy that, but the discipline said buy it. All right, because certain patterns, certain setups said that, you know, you got to go, you got to go. Now, we only went long 5% in the Ridex Energy and 5% in the Ridex Energy Services, which equate to about the same as the XLE and the OIH, give or take, on that day as well. 5%, 5% each is a total of 10%. We also went long on the XLB, 5%. Again, whoops. You know, again, my instincts and everything said don't do it. This is where the discretion comes in. We're 85% mechanical, 10-15% discretion. That 15 to 20% discretion, about 80% mechanical, 20% discretion, just to keep it simple. That 20% discretion is based generally on the amount of size that we're going to put in. It's not a hard and fast rule. That's where experience and instinct and everything like that comes into place. That's why 5% was not a very big hit against our position in any of these stocks or any of these indices or mutual funds. That 5% got chopped down by half today, so now instead of being long 15%, actually we're only long 5% total. We cut the Ridex Materials, the XLB here, so we got rid of that completely, cut that out. There is no exposure to the materials. We will look to maybe buy it back, but it's the weakest of the whole bunch. We may buy it back down here somewhere based on price action. And that's the overall intermediate term trend. Longer term, the trend in the oils. Let's look at the XLE. Oh yeah, that's bullish. I want to be a buyer of that. You know, you go all the way back to this point. So again, my price tag that I mentioned in previous updates, if you look, was ultimately the $69 price tag right in here. We're getting very close to that, possibly tomorrow. If that happens and we get the right type of price action, we may put that 15% total exposure back in, but as it is now, we've only got 5. I didn't want to get flat completely at this kind of a point because it's such a bad down day. You know, you don't want to sell into the hole on something like that. But again, you can't just sit there and close your eyes and go to sleep and hope to wake up and see everything is better than, you know, when you took your nap on. So this is risk management at its best that I can provide and that I can, you know, work with. So again, the stop point that if you check out, we were looking to get stopped out on the whole thing below that $72 price tag on the XLE. It closed below it a little bit too much, and had we just tested it or closed less than below that as we did today, we still would have taken the position off. We probably would have taken the whole thing off, but because it was such a deep sell-off, we only took off as much as we did, which is about 60% of it. More than 50%, more like 65%. Let's look at the GDX real quick. Gold tracking for the precious metals. We took that down again from 10% down to 5%. We were long all the way from back here on the Fed day. 20%, we took half of that position off on the high bars. We kept the last 10% on, and we're hoping to get a little better pop back up. We didn't. It was just a 1-2 day stab. Now we're looking on the GDX to basically right down here, and I've been watching this price point for a long time, and it looks like we're going to get it, of about 38 bucks on the GDX. If we get down to that level, we'll see what happens if we're going to buy any in the Ridex Precious Metals. That said, you know, it's a day-by-day process. Let's look at the SPY. Go back to what we were saying, using the indices as our main proxy. Looking at getting long, potentially tomorrow is the Federal Reserve meeting. What's going to happen? maybe we get a squelch muted day tomorrow and a big range day on Wednesday, give or take. If we hit 122 basically, and based on price action, if we hit 122 and then close back above the lows that were put in at 123.75 at this point, I'll put that in there for a little more clarity. If we come down, if we trade on an intraday basis, back down, that's no good. If we come down to that 122 price tag and then go back up and close above the 123 half as much as 124, we'll probably get long 30%. Why not a bigger basket? Because ultimately I like this one right here better. Right at the 1170, 117.50 to 116.50, or call it 1175 on the S&P cash to 1165 on the S&P cash. I'd feel much better getting long down here if the same scenario sets up and then we trade and close back above the July lows of 120. So I know that's a lot to maybe digest and how I just went through that. If you have questions, give us a call. But needless to say, we reduced our long exposure. We still have the 20% short exposure in the Russell, which is the hedge that we kept on. We did not move that from our long short accounts from the 22nd of July. We are looking to maybe increase that. Today may or may not have been the day to do that. We'll see tomorrow. I don't like going into a meeting with too much, Fed meeting or a big announcement date with too much position or size on, unless that size is really showing a tremendous profit. I'm also looking to get short the Qs using the RIDEX Inverse Fund, the RIDEX Inverse NASDAQ 100. We should have got that today. We would have put that on today if it wasn't a Fed meeting tomorrow. And again, you can't filter out everything, but some things like these, you just can't. You don't want to be too exposed to too much of anything. Now, I am looking to get long heavy on the XLE or the RIDEX Precious Metals, the RIDEX Energy and so forth. And a lot of people are flapping about the financials. Let's look at the XLF. You know what? They may have a little more upside to them still. They may break that $22 price tag, $22.50 on the XLF. But you know what? That stunt that, I have no confidence, zero confidence in Merrill Lynch, Smith Barney, Morgan Stanley, Goldman Sachs. I'll call them golden rats really here, is really what they are, golden rats. So what are you going to invest in? Are you going to invest in actual energy, something that people need and have to have at the right point, even though it is a dramatic drop so far and everybody's looking to call the top in commodities? Or are you going to invest with these guys, the John Thanes of the world? Let's look at Merrill Lynch. I'm going on a little bit of a rant here. These guys sell paper. Hey man, I could sell paper. Anybody can sell paper. It's day-old newspapers, and what reads on the day-old newspaper is financial system broken. And all these guys like John Thane and all the other people with these brokerage firms are trying to tell you it's not broken. Baby, it's broken. So take your pick. You want to invest with these guys, with the financials and all the brokerage firms that keep telling you they're well capitalized and everything's great? Or are you going to invest in what is basically a known quantity, period? And that is, energy and so forth. I'm going to take the energy. It's just a matter of where we get the energy at. And I think energy and everything else on the commodity side is just looking for its range. Where's the floor? Obviously, we know the highs are in here in hindsight. And we had the Doug on, a short ETF for the energy. That's done real well. We closed it back there. Certainly, we closed most of it back there. We still have a little bit of it on our Schwab accounts. Where's the floor going to come in for the energy? If it's not here on the XLE at about 69, it ain't going to be too much deeper below the lows, obviously, of this year of January. And looking for the range to be basically something like this, back up into that regression channel. Or if we come back down deep enough, somewhere below the January lows of this year, that would be an even nicer attractive point, because then we got a much wider swing range to move to make a lot more. So basically what I'm looking with the energies is where's that floor coming in on the range, and then just start working that range. So other than that, please feel to give us a call or any emails or questions. And this is Timing Strategies. Have a good night.